We're back with another deal of the week review, and this one is one that is for a close friend of mine, actually. So I'm happy to have been able to get this deal through to the finish line, and I want you guys to be able to see the way that we're able to accomplish things while maybe not having investor experience, maybe not, having as much money in your pocket, but you're actually able to get deals through to the finish line as long as we can get creative. And what I really like about this deal is that they were already getting it for well under what the house is actually worth. It doesn't really require a major amount of work and renovations. It's mainly electrical work that they're going to be doing at this property. But I want to run you guys through some of the specifics and how we were able to structure this deal. For context, the type of loan program that we used here is called a fix and flip loan. Now, fix and flip financing is specific to those who want to buy a property where they want to get the loan as a short-term loan. Typically, we see this for clients of mine that are doing real estate flips. I'm actually in Atlanta, Georgia at this very moment in time. You guys can see the massive amounts of trees that are in the background. In Atlanta, I have a lot of clients that actually do fix and flips because price points are lower. You can buy, a $300,000 or $400,000 property, putting 10 or 15% down, getting the money for the renovations in order to be able to get the property either sold or, refinancing out on the exit. And I have a lot of clients that do both. Even though the type of program you're going to use is called a fix and flip loan, you don't have to sell it on the exit. Like, you can always refinance your way out of it and, get into a long-term 30-year fixed loan, set the property up as a long-term rental, a short-term rental, a mid-term rental. It really doesn't matter as long as you have run the numbers on the deal and you know that it would make sense once you're actually out of the loan. Now, you don't want to stay in a private money loan for an extended period of time. Now, these loans are meant to be short-term, like they're, 6-month terms, 12-month terms, 18-month terms, 24-month terms, but it's very rare that we go past 2 years. I would say most on average are going to be around the 12-month term mark because the goal is for you to get in, do the work that you need to do, and then get out. Whether that's selling it on the exit or whether that's refinancing it out on the exit. There's, a lot of lenders that require you to have investor experience. That's something that is very common the more that you get into the fix and flip space. So for those of you investors who have already, done a fix and flip project where you are actually an owner on title of the home, you'll have investor experience that is only going to make it easier the more that you try to apply for these kinds of loan programs. The other cool part too is they don't really care about your credit score. They don't care about your income. They don't care about your debts. You really just need to have the money to be able to get the deal done. And so if you have the capital or you have the way to get the money together, you can make the deal happen without actually having to have everything else like a normal loan. So that's why a lot of people like it. It gives you the opportunity to get in if you have the cash. So in this example, we got the property under contract for $440K. That was the purchase price. Now, for this kind of loan program, I was able to get them a 10% minimum down payment. Surprisingly enough, these are first-time investors. They do not have any fix and flip experience. It's very uncommon for you to be able to get a 10% down payment when you don't have any investor experience. Most banks actually want you to have 15 or 20% down if you don't have investor experience, but we locked in a 10% down payment. The closing costs were relatively low. It was a little bit more than 3%. It came in around $12,000 total out of pocket for closing costs. And so with the down payment of $44,000, that's the 10%, plus the $12,000 in closing costs, we're all in out of pocket $56,000, which to me is kind of crazy. It's really not that much to come in on a deal of this size with this kind of structure. The piece that is different with private money loans is the fact that you have a higher interest rate. So on this loan program, they were at 11% as the rate, which brings our monthly payment to $3,630. Now, on private money loans like this, the monthly payment is actually structured in what's considered an interest-only format. So your payment is removing the principal portion, meaning you're not actually paying down the balance of the loan. The only thing that you're going to be paying is the actual interest of the loan. It allows you to have a significantly lower monthly payment in order to actually, either cash flow more or be able to turn the deal around faster and keep more money in your pocket ultimately. And then the second thing is that you would want to just pay off the entire loan once you're actually done, whether you're selling it on the exit or refinancing out. What I thought was the coolest part is that we also got funding for renovations, and the funding for renovations was a total of about 90K. So they were all in 396 with their original loan. 396 is the 90% that they're getting off of the 440. Then we also got the 90K for renovations. That's pretty much their total loan. Now, the ARV that we were able to figure out with the bank was, what is the property going to be worth once they're actually done with the renovations? Now, in this example, the ARV came back for us at $650,000. Their plan is to turn this property around within, 1 to 1.5 months, 2 months, if that. Once they're done with that, they're going to turn it back around. They're going to list it on the market. They're going to sell the property, ideally for over $650,000. But it's going to be an easy, $70,000+ profit for these guys in a very, very short amount of time. And you're just factoring in how long is it going to take for you to hold the loan? How long is it going to take for you to finish the project with the renovations? And if you have all of the time to prep on those things, then you can really make it happen. And if this deal would to have make sense, keeping it as a long-term property, that they probably would be refinancing out. But I would say now they have one deal under their belt, they're going to have more experience the next time that they want to go do some fix and flip financing, and they had the ability to get in without having to provide any of their own documentation to actually qualify for the property besides having the money. So I'm going to continue to show you guys the way that we structure our clients' deals. If you haven't seen my last deal of the week video, you guys can check that one out here or here. But I really hope that you guys found these informative. I like to basically just break things down the same way that I would want it explained to myself, and that's the way that we go about it with all of our clients. And so if you guys are in need of financing anywhere in the entire US, we just got our licensing in Puerto Rico 2 weeks ago. So now we cover the entire US plus Puerto Rico, and we have over 100 different banks that we work with. Feel free to go to our website. You guys can schedule a call with one of my team members, rclending.co. I hope you guys found this video informative. I will see you in the next deal of the week.